we start the session?
Yeah, let us start the session now.
Yeah. Shahzad bhai, ICI motto, please.
येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यधिकश्च एतद्वैता 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 एतद्वैता.
Are we through with the ICI motto?
Yeah, we are through.
So,
good evening, everyone. I'll take it forward. Yes, I'll quickly take it forward. Good evening, everyone. Respected faculty for today's session, C. Ajit Shah, sir, who has joined us from Mumbai. The coordinators for today's session, Manisha Ben, and all the other coordinators who are there. All the participants, a very good evening. So quickly, I will, I will not take much of the time today. I will just run you through a few of the activities of Ahmedabad branch. That being a virtual platform, you all can join from anywhere in the country. So on 22nd, I would urge all of you to join this session. It's a session on networking and net worthing that will be taken by CA Jayesh Haira sir, who is a Central Council member, and a session on the multidisciplinary partnership forms, which will be taken by CA G Shekhar, who is also a Central Council member from Chennai. The session charges are nil, but the more important point is that you have to attend, because I'm sure both the speakers are best in that. They're the ones who have designed this, so you will be very happy to learn and take that advantage. On 23rd, you have a session on the GST annual reconciliation 9 and 9C. So a very young speaker, first time speaker, will be taking a session on the GST reco. Do join us virtually. We are coming up with a special series on direct tax, the legal aspects. So case studies of direct taxes, again, will be a virtual session on 27th and 28th. We are coming up with a special session on the constitution. So normally, as chartered accountants, even though we are into legal practice, we are not aware of a lot of articles of constitution. So we are drafting a special series for that. Maybe in the next week, we'll be launching that soon. And yes, we are our Udaipur RRC. We are getting a very good response. We have extended the due date of early bird till 25th of this month. Those who are interested in coming to Udaipur with us, please join us, because it will be a absolutely different RRC, something on the leadership and communication, and special one-day workshop by Spurti Vishwas. She is a very famous leadership coach down south. So do come in for this RRC as well. With this, I once again thank today's learned speaker Ajit Shah sir for joining us today, and all the speakers for making this entire series so valuable and so insightful. I tell you, the response that we are getting, even today, I'm very happy to see a few people who have registered today for the entire series. So thank you for keeping that faith on us. And over to you, Manisha Ben, now. Thank you.
Thank you very much, Chairman sir. So a very warm good evening to Ajit Bhai Shah, the speaker for today's session, the coordinators for today's session, CA Meenal Buj and CA Hardik Mehta. Sorry, the chairman of the Ahmedabad branch, CA Harit Dhariwal, and all our participants, and special good evening to those participants who joined today on the 17th day of this session. That's excellent. So wish you all a very good evening and welcome to today's session, which basically is on the import and export procedures with specific respect to Fema. We also will be taking up certain regulations, Fema regulations today, and for which we have a wonderful speaker with us, CA Ajit Bhai Shah. Before I request CA Meenal Mehta Buch to introduce the speaker, there is one very important announcement that I would like to make, that tomorrow's session is the timings have changed and it is from 11 a.m. to 1 p.m. as vis-a-vis the timings that were announced earlier, that is 6 to 8. So it is not from 6 to 8 p.m. It is from 11 a.m. to 1 p.m. So now I would like to request CA Meenal Mehta-Buch to introduce the speaker for today's session. Over to you, Meenal.
Thank you, Manisha Babe. Very good evening and a very warm welcome to our esteemed faculty for today, Mr. Ajit Shah. He is known as a veteran of this export and import industry. By qualification, he is BCom LLB. He has also done his diploma in export and import management. He's a consultant in export-import field for more than 35 years. He has traveled internationally extensively, provides consultancy in the areas of foreign trade policy, export documentation, customs procedures, Fema and RBI regulations, and banking and international marketing. He is also a trainer for many, many years. He regularly delivers lectures on various forums like export promotion councils, export-import organizations and colleges, and also various banks. He has also authored more than 15 books on exports and imports. With this very brief introduction, I welcome Mr. Ajit Shah to deliver on today's topic. A huge round of applause for Mr. Ajit Shah. Thank you. Over to you, sir.
Okay. Good evening to all the professionals. When I received the call from Ahmedabad, I was feeling more excited because I also belong to Gujarat. So, મામા ના ઘરે કે મોસાળ ગયા હોય અને લાપસી પીરસાતી હોય એવા આનંદને વ્યક્ત કરીને મારું પ્રવચન, મારું લેક્ચર હું સ્ટાર્ટ કરું છું. આજના શબ્દ ઉત્સવમાં તમારા બધાનું ખૂબ ખૂબ સ્વાગત. Today's topic, what is given to me, is Fema related to exports and imports. Fortunately, I had an opportunity of speaking on this subject with the various regional offices of our institute. Last I delivered was for Jammu Kashmir, and based on the objective that the chartered accountants, professionals, today what situation has taken place, our clients, when they go to the professional, when they go to the practitioners, they expect many things. Client coming to you is not only interested or is not only concerned that you file his income tax return. That's an old story. Demanding from the customer, from the client, is one of the driving force for varieties of the activities which a professional is required to do. When I'm deliberating this subject, I will keep certain things in the back of mind, that you all possess the skill of reading a Fema, understanding it, implementing it. What I will be trying to deal with you is the fine tuning of that. What are the important things what you need to understand? What is the area of practice, if you focus on that, which is easily doable? Friends, the number of the practitioners available as on today in the field of export import, general consultancy and the Fema consultancy are very less as compared to the requirement. This requirement among the exporters and importers are very, very huge, and there's a substantial gap. So the first takeaway I wish to convey to you is that, friends, after this lecture, if you feel it is interesting, if you feel to expand your additional verticals of practice, please focus on practice of Fema in the field of exports and imports. So my job today, my responsibility today is to convey to you the basics, the clarity, and the area of scope which you can definitely indulge into your day in, day out practice. So we will first start with the exports. I will devote a particular time for the exports. Then we'll move to import, which will become much easier once you understand the provisions of exports because several provisions are similar. And thereafter, we will go for a question answer sessions, questions in the chat box. And at the end, we'll do, because purpose of doing a Q&A at the end is that maybe your question on the beginning gets resolved during my talk, during my presentation. So we will only take those questions which are more relevant or which are unanswered, and we will have more scope to describe this into detail. Friends, to understand the FEMA provision for on exports, you need to focus. You need to focus on a master direction. This is a beautiful thing which the RBI has done. On every topic, there's a master direction, and that is a consolidated statement or consolidated notification circular which you have to go through it, and you will get all the details in summary, in the brief at one particular place. Friends, you need to remember 16. This is the master circular number. The print copy of that should be on your drawer, or it should be on your computer, easily available to you, because entire practice of FEMA related to exports is based on this master circular number 16, which is dated 1st January 2016. So remember, master circular number 16. This is the most important thing you have to note and refer, and it was dated 1st January 2016. Yes, law should be stable, but it should not be stagnant, and therefore amendments were introduced from time to time on this master circular. And as on today, when I'm addressing to you, there are total 7 amendments which has taken place to this master circular, and the last one was on 8th of January 2021. This circular was the last circular, which last amendment which has taken place to this master circular. So master circular number 16, originally dated on 1st January 2016, amended by 7 different amendments, that if you keep in the mind, you have a document on the basis of which you can frame, you can practice your FEMA related to exports. Now, export transaction, as we generally understand, in a very common parlance, on day-to-day exercise, the goods going out of the country and foreign exchange coming into India, that transaction will be regarded as, will be considered as exports in general. And that understanding is good enough for you to understand this transaction. So for that, what you require to understand is, one is a foreign trade policy. Please understand, FEMA is under Ministry of Finance. Foreign trade policy is under Ministry of Commerce. Under the Ministry of Commerce, there is an organization called DGFT, Directorate General Foreign Trade. Very, very important, headquartered at Delhi, and they have a regional offices and sub offices. So all the RA, Bombay also, in Ahmedabad also, at Lal Darwaja, I think there is an office of Ahmedabad RA Foreign Trade Policy. Now, let us first understand a little bit about DGFT Foreign Trade Policy. Foreign trade policy is a Bible for exports and imports. Yes, you need to understand. You may not masterize it, but at least you should have a general idea about the foreign trade policy, which is the base document, which is a regulatory document, which is explaining the various provisions about the foreign trade. That is very important. Friends, what we call in general exports and import. Very common business parlance we use that I am an exporter, I am an importer. But for your better understanding, please, in the government parlance, in the government language, in the government book, the word export and import is referred as a foreign trade. So that is why it is a foreign trade policy. The officer is called DGFT. The organization is called DGFT, Director General Foreign Trade. The officer is called FTDO, Foreign Trade Development Officer. So these are the foreign trade is the terminology which is being used in the government book in a government parlance. So this is the book which you should understand. Now, it is a right to inform you that the present foreign trade policy, which was extended beyond the 5 years, will now be a new foreign trade policy, will come from 1st April 2022. So, whatever reference I'm going to give you about the foreign trade policy in today's presentation, that will have a life of only 3 months. So January, February, March, thereafter the new foreign trade policy will come. So first things you need to note is that 1st April 2022, you need to study, you need to refer the new foreign trade policy. Generally, foreign trade policy period is for 5 years. So 22 policy will be for 27. So good enough, stable, long-term foreign trade policy. So this foreign trade policy will have 2 parts. One is a policy and one is procedures, or what we call handbook of procedure. Now, just to explain to you the difference between these 2 books, because that is the base or a pillar of your practice in the field of exports and imports. Suppose your client is exporter of ready-made garment. He has got the order for 10,000 shirts. And he comes to you that I wanted to avail the benefits of foreign trade policy. You will go through it, and there is a chapter 4, advance authorization, where it is mentioned that if you have an order, you can import your raw material duty-free. That means your client who is having an order of 10,000 shirts requires a fabric, raw material, which he can import from anywhere in the world without paying any import duty. So he is excited. He says, good, I will get the fabric without paying any duty under the foreign trade policy, which is given in chapter 4 of the policy. So we will advise him. But friends, here, after you inform to him about the incentives, if you will go through in the policy, nothing more is given in that. The client as well as you will have a question that how to avail the benefits, when to apply, whom to apply, what is the application form, whether to apply before the shipment, whether to apply after the shipments. All these questions are truly answered in detail in another book that is called Handbook of Procedures. So friends, what you need to do is that as a profession, to give a complete picture to your client, to your customer, what you need to do is that you need to study both foreign trade policy as well as Handbook of Procedures. That is the one document you need to masterize along with the Fema circular number 60. Yes, the rules and regulation framed by the government of India, as well as the various directions which are issued by the RBI and the RBI. So which, in other words, is the Fema, which is the RBI circular number 16. So these are the important things what you require to do. We all know that Fema 1990, since today you have completed almost about 1 month, and majority of these, the basics about the Fema are already well registered with you. So this is how basically it will work it out with this. So now, once you have these 3 things known to you, what we call a TPOI, that is the foreign trade policy, along with the Handbook of Procedures, your RBI guideline, and the Government of India's rules and regulations. This is what you require to do. So let us first understand the basic principle on which the entire circular number 16 is based on. And that you need to register very well in your mind. And that reads like this. All exports must be realized. And same way, all import must be paid. So this is the basic slogan. This is the fundamental which is required to be understood by you. So any exports or all the exports must be realized and all the import must be paid. That is the basic punchline of the Fema guideline. Now, let us understand the by procedure through a storyline. Asha International is a company in Ambawadi in your Ahmedabad, and they are the exporters of, let us say, garments. They wanted to export the garment. They have got the order from the overseas. They have prepared the documents, and the goods are shipped from the port, maybe a Kandla port or a Mundra port or a JNPT port. The goods have gone out. Shipment is over, export is done. Now, what is the responsibility? What are the obligations of ASA International as an exporter? The first thing is that the first responsibility they have is that they have to submit all the exports documents to their bank. Please remember, the bank has an important role to play in the activities of exports and imports. Your banker will be your economic department. Your banker will be essentially required to play a very, very important role over there. So what is the time limit? The first important thing what you need to convey to your exporter, and mainly for the new exporters, that please understand that you have to submit all your exports documents to your AD bank, to your bank. I will use the word bank, which is authorized dealer. You have to submit documents to your bank within a time limit of 21 days. Very, very important. And depositing the documents to the bank is very, very important, for which the 21 days time limit is prescribed in the Fema, and all the exporters must comply with this part of it. Now, what happens if you're not submitted? Please remember, Fema has given enabling provisions that powers are given to the bank, that bank may consider. Discretion is given to the bank. Bank may consider to accept the late documents beyond 21 days, provided the bank is satisfied about the reason of your delay or reason of non-submission within 21 days. Now, let's see what happens practically. Say, I go to Bank of Baroda, I go to Bank of India, I go to UCO Bank with my documents, and 21 days are over. So late submission. Most of the time, what I have observed is the bank, once you go after 20 days, 21 days, will not accept the documents when you approach the bank after 21 days, late submission. So what the banker will say? Banker will not say flat no. Banker will say, आपके पास में रखिए डॉक्यूमेंट्स, जब भी पेमेंट आएगा तब आप वो लेके आइए. We will regularize it. Let us understand what is the logic behind it. Why the bank is not accepting on a particular day, but is willing to accept at a later date. We see the two situations. Asha International could not submit the document within the time, 21 days. Approaches the bank, let's say at 50th day, very much late. The bank will ask Asha International to wait for the payment. And when the payment is received, take the document. So what the bank will do is that bank will be in a comfortable position to regularize the delay, more particularly when the payments are already received. So it is more of a lapse will be regularized. Now, let us say second situation where the ASA International, when approaches on the 50th day or even later on, the payment has not come. Banker may not be willing to accept the documents which were not submitted in time. Let me take you back to the procedure or the historical development of the Fema and the role of the bank. We all know 1999, that is in 2000, the Fema was implemented. Today we are in 2021. So 2 decades, almost 21 years have passed in the new regime. And I have observed over a period of time, Reserve Bank has relaxed several provisions. Reserve Bank of India has liberalized various provisions. All of you must be knowing about the LRS amount and all. But what they have done is that they have very clearly mentioned that now all our banks, all our authorized dealers, all our branches are matured enough, experienced enough to handle. So more and more powers are delegated to the banks. But RBI has not done this blanket. When the powers are delegated to the bank, yes, they are discretionary power given to the bank, and bank is made responsible for the discretion power which they are using it. So they are answerable. So compliance level expected by the bank is increasingly high. And that is why many of the time the client comes and complain that, sir, bank is asking this later, bank is asking that later, bank is asking this later. I always say, yes, my dear friend, when the bank wants to exercise their discretion power in your favor, it is the obvious that bank need to be satisfied. And how a particular bank or a bank officer will satisfy, it differs from bank to bank, person to person, even time to time. So convey, educate your clients that the moment you are not complying, moment you are coming into the bracket where the bank has to exercise their discretion power, at that time bank will definitely will ask you for a more information, and if satisfied, then only the bank will exercise that discretion power in your favor. So first learning is the exporter must submit the document within 21 days. So once if that is done, so that will be absolutely clear. So what the bank will do? Asha International submitted the documents to the bank, and the bank has received that well in time. Now what the bank will do? The document received by the bank will be forwarded by the bank to the overseas bank of the importers, buyer's bank. So generally we say that in exports and import activities, it is the document bank to bank. The language they use, the terminology they use, the phrase they use is a sending or submitting the document through the banking channel. Yes, Bank of Baroda, say Ambawadi branch to whom you have submitted the document will send it to the Deutsche Bank, Germany, who happens to be the bank of the importer. Document will go over there. The Deutsche Bank, Germany, will hand over that document to the importer, and that is how a channel is established, a link is established, a record is established about the movement of the documents. When the documents are received by the importer, yes, he has to honor the documents based on the terms of payment. As you all know, there are 4 international payment terms: advance payment, document against payment, what we call it a DP or at site, DA, Udari, Usance, and last one is a letter of credit. So I'm not going into detail of this, but these are just basic 4 names you have to remember. And based on the payment terms used in a contract, payment terms used in a transaction, the bank in Germany will deal with the documents and will collect the payment instantly or at a later stage as per the terms of the payment. The German buyer make the payment to the Deutsche Bank and collect the original document and collect the goods based on the bills of lading. German bank will remit the money to Bank of Baroda Ambawadi branch, who will credit Asha International account with Bank of Baroda. This is how the cycle gets completed. Now, in reality, in practice, in day to day, there were complaints coming from the exporters on few accounts. The first, they say that the delay is taking place when you give the documents to the bank and the bank sends it to the overseas, and by the time the importer gets, there's a delay. There will be an element of truth, but it's not always the case. But yes, when the transaction is such where the transit period is very less. Say, for example, you are exporting from Chennai and the shipment is going to, say, Sri Lanka. The transit period, voyage period, the journey period is very less. And many of the time it happens that goods reaches to the destination, but documents are not available. And that results into damage, which is a concern of exporter as well as importer. Yes, this is the reality, but not in all the cases. Thereafter, there are charges. Obviously, bank will charge. Bank does not belong to Mother Teresa's family. So they have to charge for all the services what they give, which many of the time the exporter feels that this is not, this can be avoided. One more thing is that many of the time the foreign buyer insist that you give the documents directly to. Yes, the voice of the exporters was heard by the authority. And these general provisions that documents are to be submitted, documents are to be routed through the bank have some exceptional situation also were designed. First, as we know in foreign trade policy, there's a provision called export house, or you can say in totality, recognized exporters, government recognized exporter. Yes, there are certain turnover basis. So a status is granted. So who are those status holders? They are renowned, they are performance, they are proven. So government thought, okay, let us make an exception. Let us categorize these exporters and give them some mileage, give them some facilities, give them some advantage. And all those who are recognized exporters, yes, the government has given a privilege to them that they can send the documents directly to the foreign buyers. But there are two important things. Original document, you can send directly to overseas buyer or to the overseas buyer's bank, your choice. But two things are important. Copy set of the document must be given to the bank, because bank requires to record as well as create that reference number and to complete the formalities. So copy set of the documents is required to be given to your AD bank, so for the record and reference. So a bank reference number will be generated on that. Second, although you are sending the documents directly as a privileged person, the payment must come through the banking channel. So this is one important aspect which one has to remember. Now, there is one more avenue whereby documents can be sent directly, and that is if the full payment of that is already received in advance. So the RBI and the government is of the opinion that if I have received the full payment, I have received the full realization, then there is no risk, there is no need, there is no necessity to track that particular transaction as the full payment is received. And therefore, the people who are capable of getting the full payment in advance, and if you're lucky enough to get the advance, yes, then in that case, this privilege should be extended to you. And that is why this is given to exporters who receive the full payment in advance, and this is what they require to get. So exporters, those who are able to get this, yes, they can definitely have the privilege of getting it done. In case of the LC, if that is mentioned, then that also can be considered by the bank after studying this particular part of it. A unit in SEZ also is been given this particular opportunity, this particular part of this what they require. So let us take another situation. Asha International exported 10,000 shirts. Let us say the value is $25,000. After the documents are submitted, after party received the goods, for whatever the reason, for XYZ reason, as it happens in the business, that the overseas buyer, he wanted that some reduction, some deduction he required that this is to be reduced. A reduction. It can be a claim, it can be a delayed payment, it can be quality mismatch, all reasons can be 101. Then what is the provision? Already goods are exported, documents are already generated, shipping bill is already there. Then the RBI has given a leverage, has understood the reality of the life, have understood the practical things, and then they have given the first leverage that yes, if you wanted the reduction in the invoice, and if that reduction is up to 25% of your original invoice value, GIV, gross invoice value, then up to 25%, you can do it without prior approval of RBI. That means it is like a blanket. You inform to the bank will take care of it, bank will understand calculation. If it is within 25 years, then friends, you have a privilege to do it out. Why this is required is that when the buyer, after receiving the goods, will not, if he will not agree to this, if then perhaps the entire amount can be at a stake. So it all depends upon, and up to 25%, you do not require to approach the RBI. It can be done by yourselves with the help of your bank. But if it is a higher than 25%, then obviously the bank, RBI wanted to know, you have to approach your bank and you require the permission or an approval from the RBI for the amount of the reduction in the invoice if it is a beyond 25%. But then there is a one more good provision which is given in the subsequent clause, in which it says that if you are an exporter for a more than 3 years, what we generally say, established exporters. If you are already established exporters, then even that 25% limit also is not applicable to you. So you need to work it out, your status, you need to work it out, how you are, and based on that, you have to take the call. And if the reduction is required, which is obviously your financial loss, but as far as the compliance is concerned, as far as the rules and regulation is concerned, yes, 25% without reference of RBI, without prior approval of RBI is granted as a general permission. Now, friends, here I want to take you to another dimension. Little bit deviated from the main topic, but it is very necessary for you to understand in conjunction of this particular provision. All of you are aware that there is an institute, there is a credit insurance company called ECGC, Export Credit Guarantee Corporation. Excellent work they are doing it out. They are protecting Indian exporter against the bad debts, against the non-receipt of the payment. Very good, they are doing it. Now, let us understand this. It has happened with me. There was a client in Surat, exported the goods to Nigeria, and the buyer did not turn up when the payment was to come. The exporter felt this buyer will not make the payment. Fortunately, documents were with the buyer, exporters, so they have decided to bring the goods back. Friend, many people are not aware that if you export the goods, buyer do not take the delivery, and you require to call back the cargo. In that case, there are expenses that also there is a policy in which ECGC covers certain expenses of bringing the goods back. So, but there also, if you'll see the percentage given by the ECGC for bringing the goods back, that is an expenses. There also, it is work it out with this. But suppose in my case, the Surat exporter who exported goods to Nigeria, and this Nigerian buyer does not make the sense, he is not interested, and I'm forced to sell it to some other buyer at a reduced rate. They are also up to 25%, they consider it. Well, friends, so the guideline which is given in the Fema has got also the implication which is over there in ECGC also. So both you can study in both the cases, 25% is the limit which is given, which are very supportive to the Indian exporters. Let's take it forward. Asha International exported 10,000 shirts, value 25,000 US dollar to a buyer in Germany. Buyer receives the goods and buyer wants to make the payment. So please understand the time limit which is required for you to realize this amount is 9 months. Let me take you back to the historical background that this time limit for a long time, it was 6 months. Then it was increased to 12 months. And the 12 months, when it was increased every time for a period of 1 year. And at the end of the year, there was a notification which used to extend this period of 12 months. It so happened that there was a situation where the extension was not granted. So there was a vacuum period where the people were confused as to what to be the time limit. Then RBI issued a circular number 37, wherein it was clarified that 9 months is a period within which you have to realize and repatriate the amount from the overseas. Friend, today, 9 months is a period from the date of your exports. You have to bring the foreign exchange, you have to repatriate and realize the amount in India. Now, let us take it forward further. Today is 9 months over. What will I do? Either I have not received the payment or I have received 80% of the payment and 20% is still unrealized. RBI has given enabling provision. Then RBI says that exporter can approach his banker, authorized dealer, and request for extension of the time. Friends, in that case, you have to extend, you have to apply for the extension well in time. You have to give the reason. You have to satisfy to the bank what efforts you have done. And based on your efforts, based on what you have discussed, the bank will take a call and will give you the extension of time. Now, this extension generally is given to you, depend upon your requirement. Based on that, generally 6 months is what most of the banks are giving it, but it is a case to case or a bank to bank. And if the extension is given, then it becomes your responsibility to bring the foreign exchange within that extended period. In case, if you require a further extension, then you have to convince the bank, you have to make the present, and the bank may grant on its own, or bank may refer this request through the RBI and take an approval from the RBI, and then they give you the extension required by you. So there's a provision which is already available to you for this time limit. One more situation, it has happened with me. There's a client of mine in Malad exporting Jan shirts. We had a buyer in Germany. I remember the shirt was a BOSS, Boss. And we regularly used to export. This buyer, the German lady who was our buyer, regularly takes 1,200 shirts, 1,200 shirts regularly. And moment the goods are landed in Germany, she clears the goods, makes the payment to us very regularly. It so happened that one particular shipment, what we did, and for whatever the jolly good reason, communication with her was not getting established. So we were worried what will happen. And actually it has so happened that she has not come forward. In that situation, we realize that buyer is not interested for whatsoever jolly good reason. So we have to find a solution. Please remember, friends, there is an enabling provision in Fema that you can change the buyer after the goods are shipped. So we, through our contacts, through our agents, we tried to find out another buyer in Germany. Somehow other, that new buyer, we could not successfully establish the contacts with him, and we could not sell it. Ultimately, we could sell that same product to Doha, Qatar through our agent. And then we realized when you are changing the buyer, two facts you have to remember. Obviously, the new buyer will be aware that these are frustrated sales. So he will not buy at the same price as originally you have invoiced. So he will ask for a discount. He will ask for some reduction. Here again, up to 25% reduction for change of the buyer is permitted. And the time within which the payment is going to come, that you have to maintain that 9 months, what is essentially required, which is the basic punchline. So 25% reduction. So change of the buyer in the same country or another country is also permitted. So this flexibility will be useful to you if case of the situation where there will be a problem. Now, this is very common for many people, mainly those who are exporting to Africa. I will share with you the exact situation, what has happened. We were exporting to Zimbabwe. There was a buyer, Sinath International. Goods we were exporting to Sinath International, Zimbabwe. But the payment was coming from Hong Kong. And this payment which was coming on behalf of Sinath International. In a very simple language, you can say third-party payment. Please understand how it works. You as an exporter is a first party. Your foreign buyer to whom you invoice the document, to whom you ship the goods, is a second party. In most of the cases, what is understood is that the buyer to whom you are sending the goods, buyer to whom you are raising the bills, payment should come from him. That is a normal commercial transaction, right understanding. But 85% cases this will happen. But friend, there are 15% of cases. I may differ with the percentage. In few cases, it happens that goods you are sending to Sinath International, whereas some Bhatia, somebody from Hong Kong, some XYZ company from Hong Kong is sending a money to me. Now, Indian exporters thinking is, sir, I have exported and I'm earning a foreign exchange, whether it come from X or it come from Y, what way the government is concerned. You are partly right. Government and the RBI have more wider view, more wider consideration than mere receipt of money. Please understand that. They have several other aspects, including international fraud, international terrorism, international fund, all these things they have to consider. So what the RBI has done, that RBI has introduced two circulars, 75 and 100. In circular number 75 of 2013, what they mentioned, they said that third-party payment is allowed, is permitted, but subject to certain conditions. So what were the conditions in the circular which was initially introduced? There were three conditions. The first condition was that you, as an Indian exporter, Sinath International as a buyer from Zimbabwe, and Mr. Bhatia of Hong Kong, who is sending you the money, there should be a tri-party agreement in which all these things should be mentioned, details should be there, and this agreement should be the base of your transaction. That means it was before the shipment. You all three were knowing that this is what it is, and that contract, that document becomes an available document which you can give it to the bank also at the time when the third party payment comes. This is the first. Second situation was, as you are all aware, that exporter requires to do a lot of documentation. Shipping bill is one such document at the time of an exports. Shipping bill is a custom document. So what you are expected that whenever you are filing a shipping bill, in the shipping bill, you also mention this fact that I am exporting to Sainath International, but payment will come from, let us say, from Mr. Bhatia of Hong Kong. So the fact is already recorded. Custom is aware about it. You have declared it. And later on, if that payment comes and the country from where it comes, it should be in a particular list. It should not be in FATF countries. So based on that FATF countries, it is allowed. So these were the three conditions. Friends, many exporters who were getting this payment earlier without these three conditions have found it very difficult to comply with that. There are practical issues, there are problems. So obviously the bank has, by all the RBI was represented by the exporters through the various forums. RBI paid attention, RBI deliberated, and then by circular number 100 in 2014, they relaxed. So the first condition, tri-party agreement, was relaxed, and it was individual bank, that is your banker, has to take a call that in absence of tri-party agreement, whether you still wanted to give this benefit of third-party payment. So some of the bank wanted that it should be in the, at least in the order or additional document what they required. Obviously, the bank will use this discretion thoughtfully, carefully, and if they are satisfied that yes, although there is no tri-party agreement, there is a sufficient evidence, there is sufficient situation whereby bank is comfortable, bank is convinced that there is a regularity, bank may consider this third-party payment and regularize the payment part of it. Today, the situation is that the bank is considering both the circular in 2.2 and based on case-to-case basis, they are working it out with this. So friends, third-party payment is allowed, but it is more strictly regulated. You all are wise enough, and I express my feelings in the prudency of the audience that they will understand why the restrictions came. Now let us continue with this flow, in which case you are the exporter, you have exported the goods. All are not lucky, but suppose if you are bad luck and the overseas party does not make the payment, that means it becomes bad debts in our local language, in our accounting language. पैसा डूब गया तो क्या करोगे? आपको फांसी होगी? नहीं, आपकी रिस्पॉन्सिबिलिटी है. फेमा की मैंने पंच लाइन जो स्टार्टिंग में बताई थी वो बहुत क्लियर थी. Every exporter has to bring the foreign exchange for the goods what they have exported. Please remember, when you are exporting the goods, it is a nation's wealth which you are exporting. And if you do not bring the foreign exchange, corresponding foreign exchange, the country will become poor. So it is essentially for the economic health, it is essentially for our economy that goods what you are exporting, corresponding foreign exchange should be brought into the country. This is accepted principle, nobody disputes about it. But as it happens, bad debts is common. Bad debts is a risk. Business is a risk. Aircraft is most safe when it is on the ground. But my dear friend, aircraft is not meant to be on the ground. It has to be on the air. Exactly according to this, risk in the business can be minimized, but it cannot be avoided. Suppose you are an unlucky person and a buyer, particular buyer to whom you have exported the goods, is not paying you, is not available to you. He's run away, he refuses, whatever. There can be 101 thing which happens when the buyer has to make the payment and he does not want to. There are two things which we all know, that the party will make the payment if he has got a fund or a money, that is what we call capacity to pay. And second is willingness to pay. Suppose he has a capacity or not, but he does not have willingness to pay, then you will not be able to get that money. And in that particular case, there are enabling provision, what we call is a write-off. Local में जो bad dates कहते हो, it is a same thing. Now what happens? There are provisions C23 in which this write-off provision is given. It is not a common, it is not mandatory, but yes, it is an exceptional situation. It is a situation which cannot be ignored. And so RBI has given the enabling provision that in case if some of your buyer, few buyers does not make the payment to you in part or in full, and you do not have any hope in spite of your best effort, because it is your own money, so you'll put all your efforts. But suppose for any reason you cannot get that money. So what happens? Yes, then you have to go to write-off provision. So let us understand this write-off provision. A, exporters who has exported the goods, who is under the obligation to realize and repatriate this amount into India, could not do so. So he can go to his bank and request for a write-off amount, that this is the bill which I want to write off. Now, please understand that this write-off is in three parts. A, what we call it, self write-off. Self is exporters. Exporter on his own has to write off this amount. Now, for this, the amount is prescribed. Please understand the amount is, suppose today is 20th December 2021. So I am today making an application for a write-off to my bank. So what the bank says, what is the previous calendar year? Remember here the calendar year. So 2020 is a calendar year. So what the bank is saying, from 1st January 2020 to 31st December 2020. That means entire calendar year of 2020. In that period, during that 365 days, during that year, whatever the foreign exchange I have realized, that amount becomes my base. That is the base of my calculation. Or calendar year realization of Forex is my base. And the government says 5% thereof. The amount 5% you can do as a self write-off. So on your own, you have to, of course, go to the bank. So although it is a self write-off, it does not mean that you will be doing in your own books and that's good enough. No, you have to complete the procedure with the bank for various reasons. So you can go to the bank and up to 5% amount, remember this amount, up to 5%, you can do what is called self write-off. Suppose your amount is more than that 5%. Then in that case, they say second stage, your banker, authorized dealer, will have further 10%, 5% of your own, 10% of your AD bank delegated power. So the bank. So total it will become 5% plus 15%. That 10% is also to be calculated based on your calendar year's export earning, foreign exchange earning during the calendar year. So it is 5%, then it is 10%. Suppose your case, your amount is more than exceeding that 15%, then please you have no other option but to refer to Reserve Bank of India, your regional authority. Your bank will approach to your RA, and upon receival of the approval, you will have to write off this amount. Now, there's one more to be understood by you. As I explained to you in the direct sending of document, suppose your client is export house, recognized export house, then as per the privilege para 2.52, that privilege is that 5% which is given to a normal exporters. If your exporter client happens to be an exporter, recognized exporter, holding the certificate of export house or trading house, or 1 star, 2 star, 3 star as we call them, then that 5% will become 10%. So here 10 plus 10. So percentage is given little higher, which is to be considered. So that is a one more privilege to them. Otherwise, the procedure will remain the same. So now what you require to do? You have to approach your bank. You have to give necessary document like invoice. You have to give the documents, shipping bill copies and all. And you have to make a request, and you have to show the calculation that how much percentage it works out to be, whether it is within the self write-off, whether it is self write-off plus AD code delegated power, and or it will go to the RBI approval. So based on your application, the bank will take a call and they will go ahead with the write-off process. Two important additional information which you should know. One is, whenever you are asking for a write-off, that means you are telling the bank that this amount I am not going to come. It will not come into the India. The foreign exchange will not come. Please remember, the export incentives, export benefits which are given to you is with the pre-understanding that you are earning the foreign exchange for the nation. So these benefits are given. Now, there are two things you have to remember. One is a duty drawback. This is the refund of duty, which you get it for the inputs, what you have used. In that, there is a all industry rates, there is a brand rate. So this duty drawback, the scheme is so designed that as soon as you export the goods, the department will credit your entitlement, whatever is depend upon the product and depend upon the percentage, on the assumption that you'll bring the foreign exchange. So let us take an example that you have exported the goods on 1st of January. You filed a drawback shipping bill. Maybe by 1st of February or 1st of March, your account will be credited at, let us say, at a 3% of the drawback on the engineering goods what you have exported. So let us say 30,000 rupees are credited to you on the drawback. But remember, you have yet to bring the foreign exchange. Suppose you have got the foreign exchange, then whatever the amount you have received as a drawback is yours. But what happens if you have not received the amount? Is this amount is yours? Answer is clear no. So when you go for write-off, it is very, very clear in the write-off application that all the incentives, whatever you have taken, all the benefits, whatever you have taken, that benefits you have to reverse. You have to go back and deposit to this concerned department, say drawback department. So this is very, very important. Now, here a role of chartered accountant will come, because all the banks prefer and wanted to rely on professional like a chartered accountant as far as the accounting is concerned, as far as the statistic is concerned. So as a part of the procedure, it is prescribed that a chartered accountant certificate will be given And that will be a part of your documents what you are submitting to the bank for a right of application. Now, friends, a question is being asked, is there any format? To the best of my knowledge, there is no format, specific schedule format is available. Most of the banks, they have designed their own format, or many of the time the bank is asking for a free format, but they wanted that certain details should be there. So whenever somebody is approaching you for your certification by you, yes, you have to check all these data details and confirm. So one expected from CA is a certification stating that all the incentives claimed or received are refunded, and that effects of that, including, say, for example, drawback, you have received 30,000 rupees, then you have to deposit that 30,000 rupees back to the drawback department. And based on that, this certificate will be issued, and a copy of the challan of a refund of the duty will be integral part of this. Bank will process the application in a due course of time, examine the situation, check the document, verify the situation, and then based on that, they will grant the right of provision. Now, exporter is required also to give certain declarations. So those declarations are pre-printed. You have to just go through it, and you have to mention that whatever is applicable to you. Like one of the things is that suppose there is a amount which is involved, but if you go for a litigation and the cost of the litigation is higher than the amount involved into it, or suppose the situation is such whereby even if you win the case, executing a decree becomes a difficult or not workable, then the government will not ask you to go for legal suit filing and go for a recovery part. Yes, the amount which is outstanding should be outstanding in a books of account at least for 1 year. It means that today you export and tomorrow you go for write-off. No. Very, very important thing for bank as well as for RBI before granting the right of consideration, and that is your efforts. Friends, you have to educate your clients, and it is very, very important that as an exporter, it is your money, it is the government of India's foreign exchange. You have to put all your efforts of bringing that amount into India, and the availability of the provision of write-off should be a last resort. You have tried your level best, then if it happens, yes, then there is no issue. Say, for example, the party has become bankrupt. You are helpless. Yes, you can definitely go for this particular part of it. Now, there are several situations what you require to consider for. When you give a declarations, you have also to give a declaration that there is no investigating agencies, any inquiries or any of the case against you for this. So this clean sheet, what we call it, a clear case, or this is also one of the undertaking the bank will definitely take from you. So write-off is a situation which we hope should not come to your clients, but if at all that situation comes, you should guide them properly about the various proviso which are available in the Fema circular number 16 for your write-off part of it. Let's talk of something. This is for the bad luck people. Let me talk with someone who are lucky enough. Suppose your client is lucky enough that he has received $25,000 in advance. Exactly opposite. He receives the amount before the execution. Along with the order, he demanded it and he got $25,000. Yes, it's a moment to celebrate the amount which comes, because you receive the money along with the goods, along with the order. So financially, you are in an extremely good position. You can use the money. You need not require to put your money. Amount received from the overseas is always good for the business point of view. But friend, there's a caution. There's a warning. The thing you have to be very, very clear that what the circular number 16, master direction number 16 says that amount receiving in advance is a good, but please use that. Export the goods within 1 year from that. In any case, if you do not use that, part or full, and if your 1 year is over, yes, then there will be a gray area, there will be a problem. I'll tell you, at Bombay Central, I have a client, they are basically in the building industry, constructor, builders, but they also have a small division which was doing exports import, and I was assisting them. They had a counterpart in Dubai. So regularly they used to ship the goods to Dubai party, and Dubai party, having a cash reach, used to send $10,000, $20,000 in lump sum in general. So amount was coming in advance. So what we used to do in those days, moment say $25,000, $10,000, $20,000 come, we go to our bank, request our bank for the FIRC. That FIRC we put into our file, and whenever the shipment goes, we take out that FIRC along with the document, request the bank to debit on the reverse of it. Very normal routine methodology we were following it. One mistake we did. We have not maintained chronology, calendar, time-wise. Some mistake has taken place. When one shipment document were there, the concerned clerk, he took one FIRC at random, attached to that and give it to our bank. Our bank manager, Forex officer, he has seen that. And he raised the objection. He said that this FIRC is older than 12 months, 1 year से ऊपर हो गया, आप इसके सामने नहीं कर सकते हो. Yes, friends, please understand that amount received in advance, you have to execute, you have to ship the goods within a period of 12 months, within a period of 1 year. Now, suppose in that particular situation, after the 12 months, suppose you want to, let's take another situation. Buyer has placed, I have a company in Malad making manufacturing pencils. So he makes a machinery to manufacture the pencil. The machines is manufacturing. He got order from USA buyer, which USA buyer got the order from Mexico buyer. So it was a series of the transaction in which they got this machine. We received amount in advance. For whatever the reason, the goods were not exported. And then there was some dispute between both the parties and including even Mexico party. Now, please remember, even if you want to return the money, advance received by you, if the 12 months are over, even branch or a bank does not have any power to allow the remittance. You have to go to the RBI without any exception. So RBI has a reason for keeping these powers with them. As all of you must have studied about the external commercial borrowing, it is very, very clear. Fema, the thing is very clear. Whatever you're doing, it should be done exactly the way it is. If it is an advance against an exports, it should be purely and rightly advance against the exports. It should not be the coming under into India as an export against advance, but it has got some hidden agenda, some other color behind it. It's like a loan. It's like a commercial borrowing. It should not happen. And for that reasons, the RBI is very strict and very, very clear that if it is an advance against it, period within the 12 months in which it is required to be done. Now, friends, suppose the nature of the product is such, capital goods, which requires a longer period than that. Yes, at the time of taking it, you have to produce the documentary evidence, explain to your bank, and if the bank gives a consent, then longer period than that, in a case-to-case basis, it can be permitted as per the need of the client, but it's not a general rule, it is a specific rule, that part of it. So this is how basically it works out to this. Agency commission. We all know that we require agent to promote our product in overseas. Marketing is a difficult task and it requires a team power. So in this teamwork, many of the companies prefer to appoint an agent in overseas. Agent role is marketing assistance. He is abroad. He contact the potential buyers. He meet the buyers who can buy the product from you. Go and market, explain, show the samples, negotiate it, and bring the orders. Yes, he will not do free of charge. You will require to pay him commission. So it's a normal commercial methodology where the payment of whoever is adding value to your business, whoever assisting you, who are giving the business, commission should be paid, remuneration should be paid, amount must be paid as a compensation. Friends, earlier the limit was 12.5%, which also has gone up. Initially it was 5%, then 10%, 12.5% was last under the Fera. In Fema, the percentage is not mentioned. So the thing is very, very clear that the bank has to take a call and bank has to justify that what percentage. It again depends the nature of the business, the trend, the industry, and there are various factors based on which the percentage will be decided. So how it works? Let us take one example that I am in India. I have an agent, let us say in US. This agent is doing work for me and I am exporting goods in which the help of that agent is also taken. Then obviously I have to pay the commission to the agent. Then I have to pay commission to the agent. Naturally, when I will do my documentation, I will require to do the document accordingly. Coming back to the same thing, shipping bill. Shipping bill, there is a clause, there's a column in which whatever is my invoice value is there, in that invoice, I have to do the analysis or I have to give a breakup of my value, which is my invoice value. So FOB, freight, insurance, commission. I have to mention that amount in the commission so that the custom officer, whose one of the job is to do the valuation of the goods which is going on, he can see the breakup and based on that, he will take the decision about the actual value of the goods, because under Section 14 of the Customs Act 1962, the valuation of the goods is done by the custom officer who based on that shipping. If you have declared the commission in the shipping bills, that means you have already informed to the custom department at the time of shipment that this is what amount I am going to pay as a commission. It means the amount will be realized to that extent less, or earning of mine will be to be considered that much less. Shipment is over, amount is realized from the overseas. I go to my bank and I request my bank that this is my shipping bill and this is an amount of remittance which I would like to do it. The bank will consider that based on your shipping bill, based on your request letter. Yes, they will remit that amount of the commission to the overseas agent as per the amount what you have mentioned in that. Friends, there's one more enabling provision is also there. Suppose the overseas buyer who is going to make the payment to you wanted to deduct that much amount of commission and wanted to send it to you net amount, that is after the deduction of the commission. friends, it is also permitted. But in that case, the problem is that as an exporter, it is your duty to inform to your bank, you have to mention to your bank the entire analysis of the transaction, your invoice value, amount received, and the balance amount was there. Otherwise, bank may not be able to reconcile that. So, as and when the amount received, and when you are submitting documents, or whenever you are giving the disposal instruction to the bank to credit your amount of realized, please give this detail. Otherwise, the bank will have mismatch in the amount. And in all the cases, the bank will say, this much amount is received less. And when, if it mount up that amount, then it will be difficult for you to clear this part of it. And more particularly in the bank, when the entry becomes old, when it becomes past, it becomes very, very difficult to reconcile it. So you as an exporter, I repeat, have two options: realize a full amount and remit the amount of commission, or amount which you have to realize, deduct it over there and obtain or get net amount. And based on that net amount, your account is credited, and the amount deducted overseas is to be adjusted against the commission which are eligible to send this part of it. So this is how basically it requires to do this part of it. Now, we see a situation whereby a typical situation, or only 5% cases will be there, but that need to understand is, suppose you are exporter to, let us say, company X in Hong Kong. You are exporting, let's say, diamond. Diamond you are exporting to company X in Hong Kong, as well as you are importing from company X rough diamond. So what happened? Between you and the company X in Hong Kong, you have receivable and payable. You are exporting, so that amount is a receivable. You are importing, so that amount becomes payable. For many, many, many years, RBI, for its own reason, they were saying that both the transactions are separate. Both pipelines are separate, and they must be respected. Rules of receipt and rules of payments are to be considered separately. And whatever you have to receive it, please obtain, please get that amount, credit your account. Whatever you have to pay, pay it and settle the amount. But there are exchange loss, there are time gap, and there is a accounting and the other financial cost is also involved into that. So after the persuasion, after the lot of representation, yes, the government has thought, let us give this also an option. So first it has started with only SEZ unit, that is called netting off, NETTING, netting off. There are guidelines under which the netting off provision was given, was made available to the unit in SEZ. There are conditions, both the parties should be same. That particular date, this is to be done net off. All these conditions were there. And of course, it is with the with your bank. You cannot do it on your own. You have to work it out. You have to make a statement, give it to your bank, and bank has to give the approval. And that's how it came. There was a problem about issuance of the BRC, what value. Now, more or less, they are settled. Units which were outside the SEZ, similar provision, after any SEZ have worked out, the RBI found, okay, the thing is getting settled down. So let us extend this. So set off or setting off provision also were introduced, and the units which are outside the SEZ. So that nomenclature, right? It is the setting off which was given over there. So this is how basically this is given. But this is not as simple as debit credit. There are conditions, there are confirmation which is required. The new thing what was given is that even confirmation is required from the overseas parties, but this can be done. One good thing which was introduced in this is a group company. Earlier, this was a 1-to-1. Yes, X versus Y and a Y versus X. Now they have extended it, and because of the international practice, some of the group also are considered. Groups are well again defined, and that's how basically it is being done part of it. When you earn the foreign exchange, you earn in dollar or freely convertible currencies, and based on that, let us take one live example. Camlin, a well-known company, well-reputed company manufacturing pencils and the crayon. They have exported and they have earned $1 lakh. So $1 lakh has come in the Camlin current account, credited to their accounts at the rate of 75, because that's a rate. So 75 lakhs amount is credited. Let's say after 1 month, they have to import machine, a plant, which is of $1 lakh. They go to the bank for remittance on that day. Let us assume the rate is 76. And import remittance will be always higher than the export realization. So when you go to purchase the Forex from the bank will charge you 76. So 76 lakhs INR you have to pay, and $1 lakh will be remitted. Now here, Camlin is losing because of the exchange rate fluctuation, which is an obvious phenomenon. It can be reverse also, but generally import payment will be higher at a higher rate as compared to export realization generally. Now, what the government has thought to facilitate the exchange earner exporters, a concept was introduced called EEFC, Exchange Earner Foreign Currency Accounts. This account you can maintain, and when you receive your earning from the overseas, when you earn the foreign exchange, you can deposit, you can put this money, you can keep this money in that EFC account which you have opened with your bank. Now, this is a non-interest bearing. Now, when you put this, what is one of the present utilization time limit is the day on which your EFC account is credited. You have to use this amount before the end of the last date of the next month. So let us say 7th of January you have received, entire January is with you. February last date, 28th, you must utilize this, else it will be converted in INR, and that amount will not remain as a Forex, it will be the INR rupees, and that is what you will be just getting this. And friends, I will take now most important subject portion on which you can do your consultancy. You can develop your practice, and it has got a huge scope, because this is a problem which most of the exporters are facing. So let's go to the basics. What is the basics? Basic is very clear. If you are exporting the goods, you must bring the foreign exchange. It is very simple sentence, but then somebody has to monitor it. For years together, the bank, who is an extended arm of the RBI, obviously it was within the scope of that bank to monitor. There was GR form system, which was in duplicate. One copy goes to RBI through the custom route, second goes to the bank, and bank used to release that GR when the payment is realized, and the RBI used to knock off this entry. For many years, this manual exercise, Herculean task, was being done as a part of the RBI. Please remember, RBI has to monitor the foreign exchange. They are the conserver of the Forex. So this was one of the activity of that bank. What happened over a period of time? The volume, which was a substantial, very mass volume, in spite of your best efforts, really, there could not be a so strong control as it was required. Then from manual, it has become online. Yes, data was transmitted online to the RBI. All the banks were putting their best efforts, but still the degree of control which was required, that was not being implemented for without anybody's fault. It was a volume which has really has come in the way. Every day, thousands and thousands of shipping bills are passed, thousands and thousands of payments are coming, but to synchronize them, that was an issue. RBI came with a software portal, EDPMS, Export Data Processing Monitoring System. Now EDPMS is operative at the moment. We need to understand how the EDPMS works. EDPMS, it is a portal RBI has introduced, and the objective of that portal is to monitor the outstanding. How it happens? Shah International on 20th of December 2021 shipped the goods under the shipping bill number 1111. Moment the shipment has gone in the custom through that data system, EDI system. Moment the shipment goes, the entire data will be transmitted from the ICE gate, that's a custom portal, to the EDPMS portal, and more or less in a real time, with whatever the time gap required essentially for the transmission based on the technology available. So Shah International exported today on 20th of December, and the data will be parked over there. EDPMS, this entry of shipping bill will come. Let us say that after 1 month, the payment is received by Shah International for shipping bill number 1111. So the payment will come to the bank. The bank will ask the exporter to give a disposal instruction. कौन सा shipping bill के सामने, कौन सा invoice के सामने ये पैसा जमा करना है. There's a purpose code. So you give a letter, always give a letter in writing, giving a full details. So bank के पास में जो ये पैसा आ जाता है, bank will make an entry, and bank will also upload this realization amount. And now the EBRC, bank realization certificate, electronically, which is also now produced or is now being generated through the mechanism of the portal only. So portal के अंदर जब shipping bill shipment हो गया तो वो entry वहां पे पड़ी है. ये जैसे बैंक में पैसा आया तो bank will match that, and moment the entry matches, it will knock off from the EDPMS. Everything is being done on a real time. Now what will happen? That EDPMS, you can say, is a software system which will show how many shipping bills are not knocked off, how many shipping bills are still remain over there. Same thing. Let us take another situation. So suppose a situation where you have received today $10,000 from your buyer. Here what happened? The amount is coming first. So the bank to whom this amount is received, you will say this is the advance against the future exports. So bank will create what is called inward remittance message, IRM. So bank will create IRM. So entry from the bank will appear first. And when you are doing the actual shipments, you will have to go and approach the bank So bank will knock off this IRM against the shipping bill details which you have exported subsequently. So both will match with each other and that will get squared off. We have discussed time limit is 9 months or 270 days. But RBI is aware about the practicality. So what they have done is that they said that entries which are outstanding in EDPMS, which are open in EDPMS because of one or other reason for a period of 2 years. Please remember, it is a much higher period than the prescribed period of the guideline because of the extension and all other things. So if it is open for a period of 2 years or more, then system itself, no officer is required intervention. Officer itself, the system itself will put a red alert flag to that IC number. So what is the net effect? Your custom at the time of exports and your bank at the time of realization will be alert. Of course, you have to go there, give the explanation, give the reasons, and comply with all the requirements what are essentially required to remove or to delete that flag of the alert. Unfortunately, or the realistic of that is that because of the COVID, because of the situations, the many companies by default, and again it was system oriented, were going into alert. Sympathetically, RBI has withdrawn that particular auto flag system of alert. Now what they're saying, that the system will not alert any of the exporters, even if it is more than 2 years because of the situation. Objective of the government is to promote exports, but they have put the word very clearly. If the bank is coming forward and saying this is the party who is not regular, who requires to be alerted, yes, then on the suggestion of the bank, on the mention of the bank, RBI will make this particular company as an alert company, and that is how the flag will be raised on that particular IC number. And the entire EDPMS system is based on what we call it on the IC code base. And it is a bank which will be the instrumental to help you to get your alert deleted. You will have to work with the bank close, and whatever the requirement of the bank is there, that you need to work it out with this. Is it clear? I think we'll stop over here with the based on the time available with me, and now with the balance time available to me, I will go for an import which will not take more, as you have already done on the exports. So let us go for an import part of it, and then we will go on this this. Now it will be much more easier for you to understand this part of it. Is it okay, Manisha? Okay. Now, pardon?
Yes, sir, it's okay, sir.
Perfect.
It's okay,
Okay.
sir.
So, yeah. Manisha Ben, you were saying something?
No, I was just saying it's okay.
Perfect. Perfect. So now in the remaining time, we'll go for an import, which will be much more easier for you to understand, as you have already understood the major portion of an exports. I will, wherever possible, I'll try to compare it also. Now, import. In that case, the master circular number is 17. So master circular number 17, which is export, it was 16. So master circular is now 17 for the purpose of import is concerned. Same date, 1st January 2016. But there are 8 amendments are there. And the last amendment is of 28th of December, 28th of October in 2020. That is the last amendment it was. Now in import, there are 3 things what is very important for you have to understand. One is a banking normal practice, whatever the bank, because in import, you go to the bank for remittance part of it. So whenever the remittance has to be taken place, bank has to take care and understand whatever the normal banking procedure is there, that is obviously required to be followed. Second thing, you go to the bank for the import purpose for opening a letter of credit. LC is a subject by itself, but I will just say that the bank has an important role to play for the letter of credit to import, more particular for import. Please understand there is a document called Uniform Custom Practice, UCP. The bank has to follow the guideline which is there for the LC. International Chamber of Commerce Paris, ICC Paris is a writer of that particular document, and this is the document which is followed or obeyed by entire world, and we are one of the participants in that with the ICC, International Chamber of Commerce. And third is the Income Tax Act, where you have mastery over it. So obviously when the remittance goes, that 15 CA, 15 CB, and the other requirements. So bank has to take care of all these three aspects, that what is required for the import part is concerned. So now let us understand. Of course, the bank has to follow that KYC norms. Now, if you have imported the goods, let us say that Deepika Enterprises, she is absolutely importer only. So Deepika Enterprises has imported the goods. Goods arrived into India, duty is paid, goods are clear, goods has come home. Now, what is very, very important is that, as I mentioned to you, every export must be realized, every import must be paid. So Deepika Enterprises has to make the payment of the goods which are imported. Yes, time limit which is kept is for 6 months. Generally, in most of the cases, you have to make the payment in 6 months' time. But there are certain circumstances. Suppose there is a dispute, suppose there is a financial problem. All these cases are there where the banks are given a discretion power, and the delay in the remittance based on case to case, bank can consider the time limit given is up to 3 years. If it is up to 3 years, depend upon the case, yes, the authorized dealer can consider this delay. Most of the time, what I observe is that the bank, whenever the delay takes place, is asking you a confirmation from the overseas party to whom you have to make the payment that they will not claim the interest. So it again depends upon the case to case, and you have to give this particular commitment, this particular part to your banker, and the bank, depend upon the case, they will work it out with this. Let's take the other way around. You have remitted the money first. Import already, for which you already made the payment part of it. So import remittance has come. The goods are to come over here. Generally in 3 months, it is expected that your goods will come. But again, if it is a longer period are likely to be there, please inform your bank well in advance. So bank will make a note of it, and then they will consider the case. However, if you have remitted the money first, and what we call it evidence of import, that is a bill of entry. If you are not in a position to give evidence of import, that means money has gone, but no bill of entry, no document, no documented proof, then please understand it very, very, very clearly that bank does not have a power to waive off the evidence of import. That is a bill of entry. So even if it is a 200 euros, bank has to refer this matter to RBI, a regional office of the RBI. Again, please remember, RBI is a banker's bank. So importer and exporter cannot directly go to the RBI. You have to route your application as per the procedure with your AD bank, with your authorized dealer, and the bank will be taking up your case, will recommend your case, and based on your remittance, based on the case, the matter will be referred to the RBI regional office, and the regional office on merit will decide the case, and based on that, they will work it out with this. There is a clear provision that the import documents should be received into India from the banking channel only. So this is a general statement. But yes, friends, there are several conditions, several situations which they have given, in which case this condition is relaxed. In fact, the number of the cases what they have given, the situations they have given under which this is relaxed are quite liberal, quite multiples, and therefore people are not having any difficulties in particular part of getting this. Write-off in case of an import is permitted up to 5%. And if it is higher than that, then you need to work it out that what are the situations. There are 3 situations in which you have remitted the money, but the goods have not come. So in that case, if it is destroyed by the customs or destroyed by the port authorities or auction, then in that particular case, it is allowed. Otherwise, all the cases will go to the RBI through the bank. And last, I will say that like a ED PMS is there, same thing is subsequently it was introduced, and that is ID PMS. Import data processing. In that case, again, same thing. When the bill of entry comes, it will be, if already ORM is there, outward remittance is there, then it will be knock off. If not, outward remittance is first, then there will be another statement which is required to match this part of it. So friends, this is how basically it requires. Third party payment, yes, same way. You have imported the goods from, let us say, company X, and you want to make the payment to company Y. Yes, same note, same circular 75 and 100, that will be in the place. More or less same conditions, tri-party agreement, indication in the bill of entry, and the FATF countries. All those provisions are already there, which is applicable. Now, I think this is what about the import provisions on that. If there's a defective goods which you have received, yes, it can be sent back. There are enabling provisions are there. Manisha Ben, now I think the time available with me, we can use it for question answers.
Yeah, sure.
Please.
Yeah. So the session was very nice. We really thank you for sharing your experience with us, experience and knowledge with us. I would now like to request CA Samir Chaudhary to read out the questions. There are just 3 questions, sir. So I would like to request CA Samir Chaudhary to read out the questions.
Please, Samir bhai.
Thank you, Manisha ma'am, to give me this opportunity. Thank you, Manisha ma'am, to give me this opportunity. And I heartily thanks Ajit Shah, sir, for this presentation. So the question which are there, one is from Sital Sata ma'am, that is receivable or payable of same customer in Indian holding company and foreign subsidiary, is it allowed or not?
So related party, right?
Yes, sir.
There is no restrictions on that. So I am of the opinion it is permitted.
Great, sir. Great. Thank you, sir.
Yeah.
CA Jignesh ji have asked that how to record sales by using EEFC.
By using EFC.
Yeah.
See the date on which the amount is received into India, then whether you park it, see, when you say the basic question is how to record the sales, right, Jignesh bhai?
Yes, sir, they are muted right now.
Yeah.
Yeah,
so,
they're muted.
Jignesh ji is muted being a participant. So,
okay. Let me explain. The question I am reframing is, the question a professional friend has asked is how to record the sales, right? Recording of the sales.
Yes, sir.
Yes,
recording of the sales will based on the invoice, in which you can take even a custom invoice or a tax invoice. And and if you are referring to a date, then it is a GST. Based on that, you can work it out on that date. Now, if your question has got an element of amount, what amount you have to take it, then there are two practices. Either you can take $1, and when it comes realization, you convert them at an appropriate rate.
Yes, sir. His question is that only he again mentioned that while using EFC mode, how to convert to INR for accounting part. That you have already.
There are two ways. Either you take a notional rate on that day, or you take on an actual basis. Many of the people are taking notional back, and they have a separate account in P&L account, exchange fluctuation account, because sometimes you gain, sometimes you lose. So the difference you park over there, and then at the end of the year, you do under the profit and loss account as one of the heading.
Great, sir. Great. Sital ma'am asked that, what if AD bank, after multiple reminders and after giving all details for write-off, is not doing it? It's still going in EDPMS. How to escalate it to RBI?
My answer to my professional friend is, when we live in the Rome, live like a Roman.
Great.
Sir, this is a very common problem. I will tell you, that is the reason I say EDPMS has a very good scope for practice. Almost, I can say, all the export. See, even bankers are not at a fault. I will tell you, very recently, because of the clubbing of the banks, the problem has got multiplied. The system in the bank also has changed as compared to traditionally what it was. So the only answer, I am also facing the same problem, right? The only thing is that persuasion, repeated visits, deliver or give whatever the bank wants, and persuasive. Persuasion is the only solution. That, see, blaming will not solve the problem. Finding out a fault with the others will not solve the problem. You have to put your thing in their hands and do what exactly they require. A huge, large number of the shipping bills and the bill of entry, IRM, ORM is outstanding today, which runs into few lakhs. So you are also part of it. Only thing is that you have to do, and that is why the practice you are getting it.
Great, sir. It was really a very practical reply you have mentioned over here. Yes, sir, thanks for that thing. So Sital ma'am have asked that reduction in price similar to exports, not allowed for import?
No, up to 5%.
Great, sir.
Up to 5% it is allowed. Okay, and there are three situations in which 100% is allowed. Suppose the goods arrived which is destroyed by the custom, or it has got an auction, or it has been by the health department. If they have destroyed the goods, then up to 100% it is allowed.
Okay, sir. Great. Sir, next question is that, can you share some thoughts on OFAC declaration, which is part of many forms related to Fema? OFAC form. Declaration form. Yeah, OFAC declaration form.
See, it is a list of the certain country. I think Cuba is one of them.
Okay.
See, there are certain countries where the countries dealing with those countries, the banks are not very comfortable. I'll give the live example. Suppose you have exported the goods to a particular country. The buyer overseas has made the payment to your bank, but your bank, moment they say it is from Cuba, they will not credit your account. In our case, it has happened that they have sent that amount back. So in that particular case, in the EDPMS, that amount will remain outstanding. Buyer is willing to pay, you are willing to receive, but the banking system ecosystem is not supporting. And RBI decided not too much involved into that and leave it to individual banks. So banks, for the obvious reason, is not involved themselves with those OFAC countries dealing with them. So this is a problem which many exporters are facing, and it is an unresolved matter, like several times in Iran. Ji, sir.
Okay, sir. Great, sir. So
Particular
Deepak Sethi ji have asked that.
If it is a particular case, then I can definitely probe into it and then see country specific if there's any solution.
Okay, sir. Great, sir. Great. Sir,
Recently, I have sorted out one 7 shipping bill of a client of mine for a Cuba that we have resolved.
Okay, sir. So we can say that it is for a particular country we have to deal with.
Yes, yes. OFAC is having a list of the countries.
Okay, sir. Fine. So the next question from the same participant is that, is it compulsory to give such declaration while entering into foreign transactions? Yes or no?
Yes. See, I'll tell you, it is a bank to bank. If the bank requires it, you have to give that.
Great, sir. Great. Fine.
Yes.
So Deepak Sethi ji have asked that, is the limit for export receivables write-off, that is 5% or 10%, is consignment wise or for the entire year?
No, for the entire year, your choice. Even you can do it 2 times, 3 times in a year. That 5% is the overall annual limit.
Great, sir. Great.
Yes.
Prasid Parekh ji have asked that, please repeat commission payment. How to show in shipping bill? Then how secrecy will be maintained, sir?
Shipping bill is basically a document with a custom. So you, your clearing agent, and your wife, only 3 people knows it.
True, sir. Fine, sir. Fine. So Vijay Singh ji have asked that export is done in the year January 2020 and payment is received from another party from different country. But it was not mentioned in shipping documents and there was no tri-party agreement. So what is to be done? It is pending in EDPMS.
Yes, yes. It will remain pending till when both the conditions are not there. In my opinion, no bank will handle that situation. It will go to RBI only.
Okay.
So you will require the regional authority approval of RBI for this particular case. Now, in that case, what you need to do is that you have to give the circumstances or sequence of circumstances why these 2 requirement of tri-party agreement and this not mentioning in shipping bill was there. If it is a one time or first time and if the amount is not substantial, if your KYC is good, the bank may consider giving it to you with a warning or with a caution that please don't do it second time.
Fine, sir. Great. Srinivas, you asked that, are freight collections remitted allowed to be adjusted against the principal expense such as port expense and other vendor payments?
No, sir. It is export realization, that is export realization or receivables and payable very specifically. Even your receivable and payables of goods and services are not allowed.
Okay, sir. Great.
It is a pipeline to pipeline.
Okay. Sir, Sonik Javeri ji have asked that foreign buyer has failed.
You go. Yeah, please go ahead.
Yes, thank you, sir. Foreign buyer has failed make payment for goods export, but has given immovable property for payment. Whether such a thing is allowed?
No, sir. It is a barter. It is a pure forex.
Yes, sir. Fine.
Pure forex.
So Prasid ji Parekh have asked that anything on forward contract of foreign exchange?
But that is not coming within the Fema. Forward contract perhaps will be with the bank system of your hedging.
Okay, sir. Fine.
Fema ये दो circular में कहां पर भी उसका mention नहीं.
तो सब कर पाएंगे नहीं कर पाएंगे उसके सामने.
Forward contract आप कर सकते हो based on the individual banks rules and regulations and the hedging provisions.
Fine, sir. Great. Sir, Prashant Tilala ji have asked that advance payment done for import goods actually received in India, but the same way not as per specification, so rejected, and the same was to be returned to associated in India. However, the refund of advance payment is still not received from foreign supplier. The same is outstanding since last 2 years.
Yeah.
Now,
so,
sir, just a moment, sir.
Please.
Now the question is that, can the same be written off or not?
No. First of all, import write-off is not within your privilege.
Okay.
Export write-off is your privilege, not import write-off. Now here what has happened, you have, let us say you have sent $100. The goods arrived into India, you have cleared the goods. So moment you clear the goods, that entry will square off. But after you receive the goods, you found that goods are defective. Then you have to either return the goods over there, or if you have done, you have given it to somebody in India as a, this is not permissible.
Okay.
The moment you have remitted the goods and the goods arrived into India, that transaction gets closed in IDPMS. How come that entry remains outstanding? Can you explain to me?
So what I feel, sir, they are just mentioning that they have given the goods to some associate in India of that foreign supplier.
Sir, but it is given to associate after clearance of the goods, no? So bill of entry must have been generated.
Yes, sir.
Correct. The bill of entry is generated. That means transaction is squared off in the system.
Sir, Prasanji, since you are online, what I can see, so if you can focus on your query, so it can be very well addressed by the sir. So if possible, kindly mention in chat box, sir. It's a request, sir. So let us wait for that thing. So can we? Yes, ma'am.
Samir, you can go to the other question.
Yes, that's the thing I was asking, that whether we can move to further.
Please.
So
yeah, please move forward.
Yes, sir. Sir, very few questions are remaining, sir, now.
No problem, no problem.
Yes,
no
sir.
problem.
Thank you for that. Kisorji asked that limit of write-off of 5% is on the basis of total turnover of the year till the date of write-off.
No. Very clearly. Amount actually realized during the calendar year by that company into India. पैसा आपका कितना foreign exchange अपनी country की kitty में आया है.
Okay.
It's very clear. Not turnover, not profit.
Yeah, further here, it didn't ask that only. Or otherwise, for the year in total to be decided at the end of the year.
No, it is very clear. How much you have realized. The date of realization in your account from 1st January 2020 to 31st December last year. जितना पैसा आया है export के सामने. That will be your base.
Great, sir. Great.
फिर एडवांस में भी आया, आगे का भी अगर कुछ भी चलेगा.
Done, sir. Done. So last question for today. Can the freight for export be paid to foreign shipping line or it's Indian agent in foreign currency?
No, it can be paid to the foreign shipping company. I have got a very good article on that with the detail. If you can just tell me, I will share with you. It is excellent provision. Yes, you can pay to the shipping company. Problem क्या आती है? Local clearing agent को वो पैसा चाहिए. वो नहीं allowed है. पर ये foreign shipping company को you can pay.
Okay, sir. Fine.
So answer is yes. And with Manisha Ben or with Harit Bhai, I will share you that detail also, which will be very useful to the person who has asked the query.
Great, sir. Great.
Thank you, sir. So you can share it with Harit Bhai at the email ID that we provided to you.
Perfect. Perfect. I will share with you in a day or two.
Sir,
sure. Thank you, sir.
So it's really a very great session, and where mostly all the faculties kept some presentation with them. They are teaching with the PPT, but since a long 2 hours without any presentation or something like that, you are teaching in a very lucid manner, and even all the participants have understood. I can see in the chat box that many participants have addressed that, sir, really it's a nice session, it's a fruitful session. Without presentation, sir, you are mentioning in such a way. Your long experience and even the books which is behind in your background, it says a lot from on your part, sir. And so for that, on behalf of Ahmedabad branch, myself, C.A. Samir Chaudhary, thanks you a lot for your nice presentation and giving a valuable time and clearing all the doubts, even extending your time for more than 8 minutes in this event, sir. Sir,
for South region, I have just finished writing a book on Fema and export import last week only.
Great, sir. Great. It's really a great, sir. And sir, really many people, we can see a chat box that they are mentioning that it is really a nice session. So, sir, on behalf of Ahmedabad branch, I really thank you from the bottom of my heart. And even, sir, we expect, and the Ahmedabad branch expect that even in future, we will get a chance that whenever we are inviting you, you will be part of Ahmedabad branch. for
Sure.
sharing your excellent knowledge, sir.
What Manisha Ben we can do, what are the questions you have received? If you can send it to me, I will draft a reply of each one, which you can publish or we can send it to them. Like generally after all these seminars, I reply about 20 to 25 question answers, and that will be your good publication. You can do it out.
Great, sir. Great.
Sure.
So I'll
Thank
put
you.
the
Thank you so much,
clauses
sir.
and all those things that will be more available to them as a study material.
Thank you
Really
so much,
grateful to
sir.
you.
If you have any magazine or anything, you can just use that as a, so the people get a mileage.
Sir, Hitesh Thanki ji asked that, sir, if you can see your email ID and mobile number, if possible for you. Sir, it's only your
900.
Sir, just a moment. Let me type in the chat box.
Okay, I will put it in the chat box.
Yes, sir, sure. It's our privilege.
Yeah, I will do it.
Sure, sir. Great, sir. We have already issued that thing in the chat box. Thank you for that. So only last thing people have asked that, sir, whether if you can refer some book for the participants who are new to import and export practice.
My suggestion is that Master Circular 16 and 17, if you take, they are about 20 pages. It should be good enough. And moment this southern region institutes, if they are going to publish my book very shortly online, so I will share a link with you online.
Okay.
That would be great, sir.
Yeah. And I have written one book for Chamber of Tax Consultants. That link I can share with you. That link I will share with you. So that also, but that is a 2017 I wrote. Okay. So if you can just wait for some time, then you can see the latest one.
Great, sir. Great. People will wait for that, sir.
No, so what I will do, I will initially share you with the existing online.
Correct.
And then when the book comes, you can switch it over or you can keep both the things.
Great, sir. Great to you.
That would be great, sir.
In fact, I have a couple of my own YouTube with the name Ajit Shah. So that also you can proceed. And then this new foreign trade policy, which will be coming on 1st of April, we can do some of the program. In fact, I will be doing some program in Pride Hotel at the near Judge's Bungalow.
Okay, sir.
Okay.
That is for FIO or some other organizations.
We shall try to take the benefit of that session, sir.
Yeah, sure.
And we will, sir, even try to propose our branch that if they can take such a session in future, if possible, sir.
Yeah, I mean, we can go now very specifically. I mean, or if you wanted the newcomer, if there is a batch of 10 or 15 people, then we can do 15 Saturdays or 15 Sundays, coaching each section wise, you know, only on export import, only on these two. Like today, what I could not cover was a merchanting trade in import. It is an excellent subject where the many people are not aware about it. So that is a topic we can take, definitely take it.
Okay. Thanks a lot, sir, for giving a valuable time. Really, sir, we all are grateful with such a nice session, sir. And sir, obviously in the future, we will take the benefit of your sessions and knowledge in future. Thanks a lot, sir, for being a part of this nice session, sir.
Thank you. My pleasure. My pleasure.
Thank you, sir.
Okay.
Fine.
Thank you very much, sir. We
Thank
really
you.
are enriched with your session. Participants, just one more reminder, tomorrow the session starts at 11 a.m., not at 6 p.m. Waiting to see all of you at 11 a.m. tomorrow. Thank you very much, everyone.
Thank you. Thank you.
Thank you, everyone.